Greetings and welcome to Healthcare Leadership Live. My name is Mike Lyons. I am your host here for Healthcare Leadership Live. And, as always, we're here to bring you content that will help you be a better leader in your healthcare clinical business. And today's guest is going to help us with that on the financial side. This is such an important aspect to your business, maybe the most important thing to pay attention to. And our guest today is Rush Shah. He's coming to us from California. Rush, thanks for joining us here today.
Hey, thank you, Mike. Thank you for having me. Appreciate it.
Yeah, and then Rush, you are a fractional CFO, but yeah, tell us a little bit more about what that means and why do you do this work?
Yeah, a fractional CFO helps businesses understand their numbers, but also help them hit their targets and where they want to be. And I often tell people that the difference between a CFO and an accountant is where we look for things, right? An accountant is going to look for things in the back. It's all hindsight, tax, and compliance. But they're not really trained to give you forecast projections or deep analysis of your business, right? And so I akin it to, for example, of driving a car. Let's say you're a business owner, the driver, and your business is a car, right? How far do you think a business owners can get if they only look in the rear view mirror, right? That's what accounting is. It's just rear view mirror information. Here's what you did. But imagine having a GPS where you say, hey, Rush, this is my destination. This is my financial target that I want to hit. Help me get there, right? And so from that perspective, no matter what route we take, if we're off path, my job is to get you back on path. We'll never lose sight of our destination, right? And in a car, if you ever think about it, the GPS and the rearview mirror are never the same thing. So why would you treat it the same thing in your business, right? So that is the purpose of a CFO, to help companies grow and succeed and be financially healthy for the future.
Well, I definitely know that is a common issue and a common question. I've talked to many healthcare leaders, and they're surprisingly not confident with where they're going, and they're not always happy with where they've come from either. And I know you have done some work in the healthcare world. Can you tell us a little about some of the work you've done in healthcare?
Yeah, certainly. Well, I've spent over 25 years in the healthcare industry. Now, I work for large organizations, including Kaiser Permanente and Providence Medical Groups. So large multi-specialty, physician groups, right? But I've also had the chance to work for a small business as well. I think, Mike, as we mentioned, I tend to do a webinar sometimes where I focus on a case study.
Mm.
This last company was around it was a $15 million healthcare company when we started, and I came in as our first CFO. In just 2 years, we grew to 40 million, right? And so a tremendous growth for that company, massive improvement in their valuation. I mean, their valuation went up over 30 million in just that time frame. But it took them 15 years to get to that point before they hired me, right? I mean, that's a long time to wait around. And then in 2 years, we had this explosive growth that could happen, but they just didn't know what they didn't know from that standpoint until I was able to come along and help them out.
Yeah, a lot of times you're right. They don't know what they don't know, and I have clinics tell me that all the time. And the smart ones, they know that they don't know things, and so that's probably the biggest thing to help people progress. And thinking about clinical healthcare businesses, and you've encountered a number of businesses that had opportunities to improve. What are some of the things that you typically encounter as opportunities that they should really capitalize on to improve their future outlook?
Yeah, the 3 areas that I like to sometimes focus on is we talk about people, process, right? And what I like to add is the other P, planning, right? But let's talk about the first one. And Mike, I think you're perfect for this, is the people aspect, right? I don't think companies realize the importance of having the right people in their business, or how turnover, for example. I just made a LinkedIn post about turnover, right? How turnover can impact their numbers, right, from that financial standpoint. But more importantly, the culture of the business as well. Who you hire depends, especially in the healthcare business, especially on the service side, related things because it represents your brand, your name as well from that perspective, right? And so, yeah, I think people is very, very important. I'd love to kind of hear a little about you from what you've seen too on the people side and how that plays a role for businesses.
Yeah, well, I'm glad you mentioned that.
Yeah.
People are key, and that's why I do what I do. The best businesses that I have worked with, they know who they are. They've got great core values.
Mm-hmm.
They hire great people, and they build a space for those people to do their best work, and they foster that with intentionality, and so they get the most out of those people, not in a I don't know, manipulative way, but they
Mm-hmm.
do it in a way that benefits the patient, the clinic, the physician, and the employees. And so I think it's vital.
Yeah.
Thanks for
No,
bringing that up.
yeah, yeah, certainly. Um, and the other thing I mentioned was process, right? So the key here is to really have processes in place, especially if you plan to grow. The example that I gave of that healthcare clinic that went to 15 to 40 million, they were able to grow because we created standard operating procedures for them, right? So whatever we did in one clinic, we literally cut, paste, and put into the next clinic that we opened up, right?
Mhm.
But we had to make sure it works, making sure we do all the due diligence behind the scenes to make sure that when we're ready to go, we're we're far ahead of where we want to be, which kind of leads into my third one is planning, right? You got to plan ahead from that perspective, and even from HR standpoint, Mike, often I ask companies like, listen, are you fortified from an HR standpoint? A workers' comp can go through the roof if you're not careful. Terminations can be a nasty legal battle if you're not prepared and don't have a good employee handbook and all
Mhm.
those things. So be prepared, right? And plan for the future, plan ahead, and have the right staff in place to help you plan that space.
Yeah, and one of the key things from a HR perspective with planning, especially for a business that wants to grow, but even for a business that just kind of wants to sustain what they're doing, is plan for leadership growth.
Mm-hmm.
You're gonna have a need for new leaders at some point, especially if you're in growth mode. What are you doing to cultivate new leaders? Because what you don't want to do is to be scaling and then just kind of grabbing whoever is the closest
Mm-hmm.
person to become your next supervisor or your next manager, and
Mm-hmm.
then compounding that problem by not teaching them, training them, educating them. And so leadership is a huge tip for
Mm-hmm.
growing, I think, and that's a process you can build in.
Yeah.
Um, you know, as you work with businesses and talk with clinics, is there something that you wish they understood better, that it always seems to be a struggle for them to kind of understand,
Mm-hmm.
when you're working with them, that you wish they had a better grasp of the importance of it?
Yeah, I mean, aside the number one thing I was told is the accountant versus CFO factor that we talk about, right?
Mhm.
But I think more importantly, there's always an opportunity in the clinic to improve things, whether it's margins, whether it's revenue, right? Um, and it just depends on where you want to be, right? I mean, if you're content with where you are, great. Keep what you have, don't change it, right? But there are many, many business owners who are just motivated. It's like, hey, I know I can do just 1% better, but I don't know what that is, right? And I think the key here is you have to know yourself and what you want. And I think people forget that. And look, it's okay if you're content and things are running and you're making the money you want to make, great. There's no, but I do always ask, just be careful from that standpoint. So the moment we become compliant is the moment we lose our guard, right? And business is not easy. It's competitive. Let's be honest with you. Even in the healthcare world, it can be very competitive. And if your competitor comes in, finds a better way to do things, that's more efficient on certain things, they will take away your patients, right? And so there's no guaranteed success in anything from that
Mhm.
standpoint. And I always say just be prepared. Prepare for your end goal in mind. And
Mhm.
what I mean is, look, we're not going to be working forever. It's just the reality of how life is, right? So plan for an exit plan. What is it that you want to get out of your business? And oftentimes, if you plan to sell it, then why not maximize your margins? Why not really be at the biggest shape that you can so that by the time you hand it and sell it off, you're selling a mansion and not a shack, right? From that perspective. Yeah. So
Yeah, fix up the house, renovate the bathroom, paint the walls and all that stuff.
yeah, you sell it at a discount. So if you don't have your processes in place, you know, I had gone to a conference recently called the Business Transformations Forum, and they were talking about what it takes to prepare to sell a business. And it's a pretty lengthy process. It's not like you wake up and they're like, hey, somebody will buy my business tomorrow. It is full of ups and downs. And one of the big things they mentioned is that oftentimes when a company has to sell, there are three things that happen, right? It's often due to choice, pressure because things are financially bad, or life happens, life changes, whether it be death, divorce, whatever it can be, right? You're forced to do it. Two of those are forced. One's the choice,
Mhm.
right? So if you're in a place to choose, right, then why not choose the best option and make it the best for you? You don't want to be in the other two places
Mm.
from that standpoint.
Yeah, yeah, and be ready, like start working on it now. This show is sponsored by Seasoned Advice HR Services, where I help clinical healthcare businesses to make more money and save more money by hiring better, retaining better, and reducing your HR risk. If you would like an HR assessment or ongoing HR support, please reach out to me at seasoned-advice.com. I'm curious, you talked about, the potential to improve a business. If
Yeah.
you just randomly, picked a clinical healthcare business, what are the odds that they could, with some financial analysis and future planning and process, what are the odds that they could see, a meaningful increase in profits just with a little bit of attention, or are they all just mostly just doing awesome and there's really no room for improvement?
If everybody was doing awesome, boy, everything would be great, right? Well, look, I really believe in this 1%, right? Always opportunity for improvement somewhere in something. And by the way, Mike, when I take on a client, I don't take them on unless I can guarantee that I can at least pay for myself and in itself, right?
Yeah.
So I will look at the financials. If there's nothing there, then what's the point of having me? But
Mhm.
I guarantee that at least I could offset my own fee plus whatever our return on investment you get after what we can find from that perspective. And my clients with me a long time. It never ends, right? When you're making good money, trust me, I never said, "Hey, Rush, I want to make less money." Right? They're like, "Hey, how do we make up a little bit more?"
Mhm.
Um, but typically, it's the way it will work is we'll focus on a clinic, make sure we're efficient on it. And what you'll find is that once they become more efficient, cash flow positive, have the income coming in, then they're really typically ready to say, "Hey, this is great. Let me go replicate it to another location." And that's where that growth multiplies for them. That's where that valuation comes in. Now you're building a business, not just running it, right?
Mhm.
But I'll give an example for a clinic where we found it. This last case study that I go to, they had a cancellation rate of 20%. One
Mhm.
in five did not show up for their appointment. That is a lot of lost revenue, in my opinion. But number one, they didn't know how to track that number. They had data, but it was really complicated to get, and they didn't know how to massage. They didn't know how to use that data to tell the story about it, right? So I do want to clarify that data just data unless you can tell the story around it,
Mhm.
right? But I was able to get information, tell the story, and that's where we found out that 20% were canceling. Now, even a 1% increase was thousands of dollars in revenue coming in.
Mhm.
And so we focused on it. It's like, listen, what can we do to go from 20 to 19%? What can we go from 19 to 18? And we were actually got it down to around 16%, which is pretty good for 2 years that we did, right? I mean, but we had to figure out how do we implement it? What do we need to do and create procedures around it, including late fees, identifying those patients that cancel, creating those late fees, making sure we bill out late fees, finding repeated cancelers, right?
Mhm.
Um, because the issue here is that you have to pay for your staff no matter what, whether they see a patient or not in a healthcare clinic. You're paying for your staff, you're paying for rent, you're paying for the phone bill, you are paying for things, right? So the only way you get revenue is when you start seeing patients.
Mm.
If a patient doesn't come in through the door, guess what? There's no revenue. Right? All you have is an
Yeah,
expense.
yeah, you got to get people coming in, and yeah, a little bit of an improvement can make a huge difference there.
Yeah,
And,
yeah.
in my experience, I think people like to be busy. Employees, they don't want to work in a clinic that's just kind of nothing's going on, and patients are canceling, and they like to work. They like to be busy, and they want to be part of a winning team. In my experience, and
Mhm.
so I would think it would be incredibly exciting to be able to work on a project like that to see some improvements in the business results.
Yeah, not only did we get the data, but we created dashboards to be constantly able to monitor things, right?
Mm,
That's the big difference. You just don't know what you don't know, right? And sometimes you find out way too late. Trust me, if this clinic knew those and that information much earlier on, I don't think either they would let it ride like the way they did. But they have hunches. I think a lot of business owners have a hunch. Hey, I think
mm,
something's wrong. I think something can be improved, but they just don't know where to look. And look, I mean, we don't have the time, right? We're all experts in that field from that perspective, right? If you're a clinician and you're in healthcare, yeah, you're the expert in that place. But I spent 20 years diving into things to find things that others can't find. I mean, this is what I've done for a living,
mhm.
and so this is where it helps to have that outside expertise.
Yeah, I can totally, in my experience, when you can measure something and put that in a public place and
Yeah.
talk about it, and gets people excited to say, "Oh, look, we've had fewer, cancellations or no
Oh,
shows. Like,
yeah.
let's see if we can get it down to 15, 14,
Mhm.
let's go." Like, have you seen people kind of get excited about that?
Oh my gosh. Yeah. Well, because now they know, right?
Yeah.
And they know the impact of the changes they make. It's not just like, hey, we're going to go from 20 to 19 for the heck of it. It's like,
Yeah.
listen, if we change it by 1%, then this is how much revenue it can add on. Then the question becomes, well, do you want to take this on or not? Right? Um, but once you provide the knowledge, you can provide that factor of choice,
Yeah.
right? You have to know. And same things from many areas, even from HR, right? I mean, think about it. Turnover, as I mentioned earlier.
Mhm.
You got to be tracking what the turnover rate is for your company. How many employees are leaving? How many are coming in? Why are they leaving? Right?
Mhm.
And then be able to take actions on it. That information, that data tells a story. Right. But they
Absolutely.
need they need an expert like you to say, hey, well, here's what's happening. Let me tell you what's happening behind the scenes.
Mhm. Yeah, and the number that I frequently cite as the cost of losing an employee is around $25,000 a year, and
Yeah.
that's on the low side. We're just talking about an MA or a technician,
Yeah.
because the common range of the cost to lose an employee is anywhere from 50% of their annual salary
Yeah.
to 200% or more,
Right.
because you've got to train someone new. You've got downtime, so lost productivity. You might have to pay
Yeah.
more overtime to existing staff. Then there's the morale impact of having someone walk out the door and, oh, now we're having to work more. Um,
Mhm.
and so there's so many little ways that turnover costs money, but I'm so
Mhm.
glad you brought that up, because it absolutely has a financial impact on the business. Um, my next kind of line of thought here, as we're talking, is, you know there seems to be a lot more frustration
Mhm.
in social media and in the big media, I guess, about the traditional insurance payers and how hard it is to get paid, and some of the frustration, I guess, that providers and members have with the insurance industry.
Yeah.
Um, is there any? I'm curious to know, what have you seen clinics do things effectively to try to get more money out of their claims that they submit?
Mhm.
Tips for that you're seeing people utilize?
Yeah, yeah. The last company as a CFO, I had run the revenue cycle team. First time I had done it, and it was definitely eye opening
Mm,
on the whole process around giving money from insurance. I mean,
yeah.
It's an interesting game, right? From their perspective of business, their job is probably to deny to make their money. Your job as a clinician is like, hey, I want everything accepted, right? So you're playing this
Mm,
classic denial acceptance game for them. But again, know your numbers, know what the denial rate is,
mm,
know the process, right? Sometimes denials happen because proper authorization wasn't done. There is a whole process you have to go through sometimes to determine that. But know your insurance companies too that you sign a contract with. And I would always be cautious on the contracts I sign. I mean,
mm,
they don't always pay the highest rates.
mm,
You're going to have to determine how much volume it asks for you to stay at that rate. Their objective is to keep costs down from their perspective. That's how, right? I mean, from their business as well. Um,
mhm,
and your job is to make sure you build the right amount so that you can stay in business. So this is the counter play
mm,
here. Uh, that happens, and I mean, oftentimes what I do is I just compare their rates versus even the government rates, Medicare rates, right? I mean, keep in mind the CPT codes don't have an age range on them, right? And so if you can have if Medicare covers it, of course, right, from that standpoint,
mhm,
or Medicaid, but compare with what the government is paying from that perspective, right? I mean, they should be comparable. Why would the government pay more than a private insurance company?
mhm,
I mean, at least that's my perspective, right? But you just have to know your numbers at the end of the day. And there's always opportunity. But I'm not a revenue cycle expert. I've done it, I managed it, right? But that's just not what I spend my whole career on. But the idea is to get that information,
mhm.
make sure you have a good team, and then always ask, hey, if we can just improve this by X%, what's the impact?
Yeah, I've seen the best teams, exactly what you said. They know their numbers, they're paying attention to their accounts receivable,
Mm-hmm.
and they're holding themselves accountable to how effectively they collect and how
Mm-hmm.
effective they are at billing clean claims. And yeah, like you said, getting those authorizations done when there's a required ahead of time.
Yeah.
Um, if I'm a clinic owner and I'm wanting to grow my revenue, what are I don't know, what's an idea that maybe people should be thinking about if they want to think about growing their revenue? Is it,
Mm-hmm.
premium services? Is it working more hours?
Mm-hmm.
Is there some way
Yeah.
that people can grow their revenue without maybe growing their stress? And I
Yeah.
guess, yeah, I'd love to hear your
Uh,
thoughts.
yes. Number one, rate is key because that will determine whether they work more hours or not. Um, think about, I like to compare, let's say you're Walmart, right? High volume, low rate, right? Nordstrom, right? Very high price, but low volume. You can make money both ways. The question
Mhm,
is, what do you want to work towards, right? This is why rate is so important. And the game of healthcare revenue is really two simple things: is volume and rate, right? So one, figure out the volume, which is improving cancellation rate, making sure you have enough patients come in, patient flow happening, right? So focus on that.
mhm,
Once you have the volume, focus on the rate. Am I getting paid the right amount? What does it take? If I got a 3% increase in the contract here, well, how much money would that be? Those are the best ways to make money without, I mean, a rate increase is really money without doing extra work from that standpoint, right? And there is a way you can increase your rate and still have a lower volume, but still make the same amount of money. And I do a lot of these analysis for our clients because those are the two things. If you go up prices by 10%, depending on the rate that, let's say your prices go up 10%, you could lose, in theory, perhaps even 10% of your population, just keep the same rate, right?
mhm,
Sometimes we have a fear, oh, if I increase rate, we'll have less people coming in. But you also want to be competitive in the market when it comes to your rate. Or if you're charging a little bit more than what your competitors are, make sure you have a strong brand to justify that. So price based on value, just not what your competitor is. So don't go into competitive cutthroat competition because now you're gonna have to find other ways to make your net income at the end of the day if your revenue isn't right.
mhm.
Yeah.
Do you think that most businesses, if they had to focus on one thing or the other, should they focus more on revenue side or should they focus on the cost side of their business?
Right. Great question. And I think it just depends. And honestly, it just depends. I mean, But I'll give you this is a quote that I always say in my webinar too, right? Revenue is vanity, right? It is the top line number. You could be a $50 million clinic and still have cash flow issues at the end, and least still lose money, right? It can happen. So revenue is a vanity number, but it can help you if done correctly to create profitability. So profitability is sanity, right? So revenue is vanity, profitability is sanity, right? When you have a profitable business, you can feel a little bit at ease, a little bit about the fact that you have money coming in. But even a profitable business can have cash flow issues. So at the end of the day, cash is king, right? And so going back to revenue is vanity, profit is sanity, cash is king. Um, and that's why having AR, looking at AR is crucial, right? Making sure the cash is there, that you're not, struggling from that standpoint. But my whole point is they all tie together, right? So revenue is a component. It's nice to be a $50 million company because a 10% margin is, $5 million. It's great. If you're a $5 million company, well, a 10% margin is not going to be the same, right? So revenue is crucial, but again, it's that profitability component, right? And if you go from 20% margin on a $50 million company, that's another 5 million on it, right? So that's why growth is crucial for a business to have those revenue numbers, but you got to be efficient in your profitability and understanding cash flow.
Gotcha. Cool. Well, finance is so important. You've got to know your numbers. And I think there are a lot of clinics out there, a lot of providers out there that are just kind of fumbling through and trying to do it themselves. If someone wants to get help from a pro like you, how can they get in touch with you?
Certainly. Well, if you're on LinkedIn, you can find me as Rush Shah at Modern CFO on LinkedIn. My email is rush@moderncfoservices.com, or you can check out my website, moderncfoservices.com as well. So all of those areas you can find me.
Awesome. And I'll put your contact information into the show notes of the show. But Rush, thanks so much for joining me. I really enjoyed it.
Yeah, appreciate it. Hey, thank you for your time.
Well, that brings this episode of Healthcare Leadership Live to a conclusion. If you enjoyed this episode, please subscribe to the show on your podcast app and share it with someone who would value the content. I promise to bring you more guests and content to help make you a better healthcare clinical leader. I also invite you to subscribe to my HR newsletter for healthcare leaders. You can find information about that at seasoned-advice.com. Now go out there and lead with confidence.